Question. Imputed cost is a dash. Notional cost, real cost, normal cost, variable cost. Notional cost. Operating costing is suitable for dash. Job order business, contractors, sugar industries, service industries. Service industries. Process costing is suitable for hospitals, oil refining firms, transport firms, bricklaying firms. Oil refining firms. Cost classification can be done in 2 ways, 3 ways, 4 ways, several ways. Several ways. Costing refers to the techniques and process of dash, ascertainment of cost, allocation of cost, apportion of cost, distribution of cost. Ascertainment of cost. Cost accounting was developed because of the dash. Limitations of the financial accounting, limitations of the management accounting, limitations of the human resource accounting, limitations of the double entry accounting. Limitations of the financial accounting. Multiple costing is a technique of using two or more costing methods of ascertainment of cost by option the same firm, the several firms, the same industry, the several industries. The same firm. Wages paid to a labor who was engaged in production activities can be termed as direct cost, indirect cost, sunk cost, imputed cost. Direct cost. The cost which is to be incurred even when a business unit is closed is a imputed cost, historical cost, sunk cost, shutdown cost. Shutdown cost. Classification of cost is useful. Options: to find gross profit, to find net profit, to identify costs, to identify efficiency. To identify costs. Elements of costs are 3 types, 4 types, 5 types, 7 types. 3 types. Direct expenses are also called dash. Major expenses, chargeable expenses, overhead expenses, sundry expenses. Chargeable expenses. Indirect material used in production is classified as office overhead, selling overhead, distribution overhead, production overhead. Production overhead. Warehouse rent is a part of dash. Prime cost, factory cost, distribution cost, production cost. Distribution cost. The ratio which shows the proportion of profits retained in the business out of the current year's profit is options: retained earnings ratio, payout ratio, earnings per share, price earning ratio. Retained earnings ratio. The ratio which indicates earnings per share reflected by the market price is retained earnings ratio, payout ratio, earnings per share, price earnings ratio. Price earnings ratio. The ratio which measures the relationship between the cost of goods sold and the amount of average inventory is option: stock turnover ratio, debtors velocity ratio, creditors velocity ratio, working capital turnover ratio. Stock turnover ratio. Creditors turnover ratio is also called stock turnover ratio, debtors velocity ratio, accounts payable ratio, working capital turnover ratio. Accounts payables ratio. The indicates the number of times the payables rotate in a year is stock turnover ratio, creditors velocity ratio, working capital turnover ratio. Creditors velocity ratio. One of the primary differences between marginal costing and absorption costing regarding the treatment of dash prime cost, fixed overheads, variable overheads, direct materials. Fixed overheads. Absorption costing differs from marginal costing is the dash fact that standard cost can be used with absorption costing but not with the marginal costing. Amount of cost assigned to individual units of products. Kind of activities for which each can be used. Amount of fixed cost that will be incurred. Amount of cost assigned to individual units of products. An increase in variable cost dash increases PV ratio, increases the profit, reduces contribution, increase margin of safety. Reduces contribution. An increase in selling price dash increases the break-even point, decreases the break-even point, does not affect the break-even point, optimize the break-even point. Decreases the break-even point. Selling price per unit rupees 10, variable cost rupees 8 per unit, fixed cost rupees 20,000, break-even production in units dash 10,000, 16,300, 2,000, 2,500. 2,500. Actual sales rupees 4 lakh, break-even sales rupees 2 lakh 50,000, margin of safety in percentage is dash 33.33 percentage, 66.67 percentage, 37.5 percentage, 76.33 percentage, 37.5 percentage. Under marginal costing, stocks are valued at dash fixed cost, semi-variable cost, variable cost, market price. Variable cost. Which of the following is usually a long-term budget? Fixed budget, cash budget, sales budget, capital expenditure budget. Capital expenditure budget. The fixed variable cost classification has a special significance in the preparation of dash capital budget, cash budget, master budget, flexible budget. Flexible budget. The budget which is prepared first of all is dash master budget, cash budget, budget for key factor, flexible budget. Budget for key factor. Budgetary control starts with dash planning, organizing, budgeting, controlling. Budgeting.